Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Thursday. We're just getting it. I'm a little bit further behind than I thought here. I had some trouble with my platform, but it was because I forgot to start Rhythmic. So let's see here. We've got continued jobless claims, 1.856 versus 1.886. So it has gone down. I have been seeing some people getting jobs, so maybe this has come down a little bit. Although I kind of wonder if that's gonna be sustainable. But initial jobless claims, 224 versus the expected 225. Okay, so not a whole lot there, to be honest with you. We do have pending home sales today, 4-week bill auctions, 7-year auction. Okay, so the 7-year auction is a big one because the 10-year Treasury futures are really more of a 7-year. So you see a lot of hedging here in the 10-year. So it's might be, well, I don't know. Let's come and look at the charts before I say too much. I haven't looked at the charts. Because there has been some changes on the macro environment overnight. Okay, so the treasuries are down again. And the S&P 500 took a big hit yesterday. So it kind of started out icky, but my understanding is that Trump started tweeting about auto tariffs, and that really damaged the S&P 500. So the S&P 500 down and treasuries flat to down is not a good look. That is, we're worried about inflation from tariffs. Oil's doing okay. Gold and silver are running. This is kind of interesting that here on this one with tariffs that gold and silver have been the flight to safety. And we're not during the whole inflation thing. And then we got copper having some big spikes. Again, the administration talking about tariffs on copper. So, and that the United States is going to use a lot of copper. But let's see over here. You know, I expected there to be a bigger move in the Japanese yen than there was. It does look like this weakened the Japanese yen, but it didn't explicitly strengthen the dollar either. More complicated than that, apparently. Okay, so that does kind of put me into the mode of, I think that you would probably see some moves today. There's probably a good chance of there being more comments from Donald Trump that we need to kind of watch out for. But I don't have an explicit bias, and there may still be a slight tendency for the markets to be tight, like they were earlier in the week. So I'm kind of looking for tight with short bursts of activity instead of just being tight. Yeah. So, and that means that here in the 10-year, we're probably going to see a lot of really big icebergs. I think that we could see a lot of big icebergs in the 10-year treasury that we could maybe, take a tick off of. So we'll keep an eye out for that. Good morning, Amir and Uzi. Well, looking around on social media today, the day is starting out pretty quiet. Cool. So the 10-year treasury is showing some signs of life here this morning. I'm not seeing a very big change in cumulative delta, but there is definitely some bursts of level 2 activity going on there that kind of suggests to me that certain algorithms and so forth are turned on. I would say the way that they are behaving in relation to the inventory cost basis today also seems unusual. Well, they came up to it, they did bounce, and then immediately pushed through, and now they're sitting in the middle. Usually we don't start in the middle. So I'm wondering if the market makers maybe kind of know and are planning for things to happen today too. Well, they just went a little bit further there, didn't they? I'm still not seeing the push in the market orders, though. correlation between yields and equities has somewhat disappeared. Well, so I think if you're looking at it when you say correlation, you mean like positive correlation, yes, because yesterday the equities fell apart and the treasuries didn't really do anything. And then overnight the treasuries fell and yields rose. So it looks to me like when we look at the decline in the equities over the past 2 months, I guess now, it's easy to kind of like paint with a really broad brush, you know, and say, oh, it's all because of tariffs. It's all because of Donald Trump. But I don't think that that's true at all. You have a stock market that is extremely overextended in the first place. And then on top of that, you have a stock market that is very much being led by an AI bubble. And so a lot of the downside movement that we had, I kind of think was, okay, Trump tariffs came in and that provided bears the opportunity to more accurately price in lower growth because a lot of the growth expectations that we had were unrealistic anyways. So, and that was where you were seeing the flight to safety. But it also seems to me that whenever we are specifically pricing tariffs, we see treasuries sell. That and that's not exactly what happened last time. You know, like in 2018 or whatever it was. Wasn't quite the way, you know, it was kind of messy and complicated. But this time it's much more there's a lot of people that believe that tariffs lead to inflation and require higher interest rates. Which is kind of a dynamic that concerns me a little bit, to be honest. Donald Trump wants lower interest rates. Donald Trump wants lower interest rates, and he will do things if he doesn't get that. I think. So. Newsman, treasury buying, remember you booking loss? Like what? I don't, but we have seen both. But I would say overall, and in the last day especially, yields rose. So I mean, the thing is that when you look at tariffs, if the economy trugs along and is okay, then it is somewhat inflationary. You got to realize again that, well, two things. One is that not all products are imported. So when you put tariffs up against a certain country, it's a sizable portion of the goods, but it's not all goods. Okay, so that's the first thing that you got to keep in mind. And then off of that, you're spending more money on certain goods. Where is that going to come from? If you have high interest rates, then people aren't going to have the money to. Or let me back up. If you have high interest rates, companies aren't just going to have the money to go and give it to everybody and give everybody a raise so that they can afford the higher prices. It doesn't work that way. Funding is very, very slim. And so companies probably will continue to be really slim. And that means that individual households will have to continue to be tight. And so that means that those increased prices will have to come at the cost of other goods. right? Other goods might see less demand and become cheaper relative to the ones that are being affected by the tariffs. And so that's where, having like that broad-based inflation, the tariffs doesn't necessarily create that on its own, but it is an influence. It is an influence, and the economy is, when we're talking about a complex system, that can be the thing that kind of sparks things. And especially if you are of the opinion that, like, we're still in a situation where inflation could flare up a second time very, very easily. Because, people are kind of a little twitchy about it right now. And so, like, people's expectations can kind of make it happen, right? But the bet that I would make is that this, if this really gets really heats up, that it will be a hit to the economy, and that will actually be deflationary. And then you also have to consider the argument that the Federal Reserve has made, because the argument the Federal Reserve made at the last meeting was very much along those lines, right? They were saying, well, it doesn't really make sense to raise interest rates due to tariffs, because the tariffs are going to be a transitory force. It's going to be like a one-time thing, and then it's probably over. And so if you raise interest rates, all you're doing is weakening an already weakening economy. So it's not worth it, right? But today, Treasury is selling off. Staging a bit of a rally. We'll see if they're able to make it much above 14.5. So is it delicate balance act when tweaking levers of the economy? Well, I think that the reality is that we do not understand the complexity of it all well enough to really very effectively balance those levers. That's why you kind of have to be pretty slow and deliberate about it, right? You make a change, see what happens, because you really can't predict with our current knowledge. You really can't predict what kind of emergent properties will develop from your changes. So, but that's where I really think that you have to put a lot of asterisks on what we say and the kind of predictions that we make when we're talking about the broader economy. So everybody wants to make these big pronouncements. They saw guys like Michael Burry make tons of money in 2008, and so they think that every situation is going to be like that, where they're going to be able to predict exactly what's going to happen, and yada yada yada. But complexity basically means that emergent properties can develop from small individual interactions that are very difficult to predict from just looking at those individual interactions. You have to actually simulate those interactions happening over millions of interactions and seeing what kind of emergent properties develop. And since we're that technology is still in its infancy, our ability to predict things is often limited. And, the complexity means that you can go in and do everything right and still fail, right? You can have everybody in a system doing what they're supposed to, but the interactions between those things in the system lead to undesirable behavior at the macro scale, right? And similarly, you can have people that do everything wrong and are still successful, right? That's one of the things that can emerge from complexity. So we got to be careful here, sitting because we have this idea, especially in America, that's like, if we do everything right, then the economy should fail. Like a lot of the people, when they're predicting Donald Trump's actions will create a recession, right? Well, there are some people that are economists that they're just saying, well, broadly speaking, tariffs tend to be a negative drag on the economy. Okay, fair enough. Doesn't necessarily mean that's how it's going to turn out this way, that there's not positives to them, that there might be certain dynamics in the modern world that might make the situation different. There's these sorts of things, right? But I think that most lay people, when they're thinking about these sorts of things, they're really thinking of it like, well, open trade is good and closed trade is bad. That's doing bad thing, ergo economy should not like it. And that's kind of the heuristic that we use. It's called prosperity gospel in the United States, right? So people think, or another way they might think of it is, oh, well, Donald Trump is an evil man, ergo the economy will do poorly under him. But because of complexity, that's not what actually happens. So, it's going to happen. He's going to do his things, and we get to study and see what happens from it, right? It's just, I think, a little bit, there's some people that are really, really expecting higher interest rates, and they don't really see how this can result in lower interest rates. They don't really see, it's kind of contradictory, right? It's like, well, tariffs are bad. That's going to hurt the economy. But interest rates are going to stay high. But like if we go into a recession, they're going to cut interest rates, right? I'm not expecting a recession, but Donald Trump's plan to transition the economy should result in a period of weakness. I mean, that's just kind of the trajectory that we can see right now. I would expect GDP for the year to be something like 1.4%, which is not a recession, but it's not very good. It's not very good. So from that perspective, I kind of think that the market's larger expectation for interest rates is probably pretty okay. That maybe starting in the summer, they might start to cut interest rates again. Yeah. Pulling the levers are more confident. Well, but that's kind of ignoring what I just said, right? You can have people that are very, very smart and doing all of the right things based on the information that they have, but because of the complexity of the system, it still doesn't turn out the way that they want. Because complexity means that emergent behavior can result from the small interactions that is very difficult to predict from just looking at the small interactions. Hmm. And this all kind of has me thinking back on the big headline that I saw when I woke up this morning was, or not just when I woke up this morning, when I was reading like the market kind of summaries and everything yesterday, was that Trump was talking about slapping 20% auto tariffs. And I would have expected that to have a dramatic impact on the Japanese yen, and I don't really see that in the chart. What's with that? And in fact, on this move in the treasuries, we are seeing the treasuries and the Japanese yen move in tandem pretty closely. Hmm. I was just hearing something news squawk about the Ukraine war. Now that's another one. We didn't get a lot of comments when we were discussing this before, but I just want to bring it up again. I've noticed a shift among conservative commentators about Ukraine, and their basic message is they believe that the Trump administration is wants to separate Russia and China. That they don't really care about, that they're not really that concerned about Russia like trying to take over all of Europe or anything like that. They're more concerned about the alliance that Iran, Russia, China have with each other. And so their kind of strategic plan is Israel can deal with Iran, and Iran is kind of chilling out anyways, and we need to separate Russia and China. So we give Russia the semi-win on Ukraine and entice them away from China's orbit so that we can have a more direct we can confront China economically more directly, essentially. Now that's a theory of theirs. I don't see the proof of that. I don't see like where the administration is saying that is their explicit strategy. But I don't think that these guys are getting that from nowhere. So that is a curious thing to know. And as it ties into what we were talking about before, I think especially with the last trade war and throughout the campaign season, I know I especially talked a lot about, ideally you don't get the tariffs, right? Ideally you threaten the tariffs and then everybody negotiates and does, comes up with a deal before things get too bad, before there's too much damage. Because you kind of go, well, it's probably better for me to just, because part of it is they have tariffs on us, right? Especially with the autos. So from their perspective, it's, at what point is it, we really want to keep those auto tariffs on? It's not worth it. And you're going to get off of it. But if this theory is correct, then Donald Trump is really not trying to negotiate. He might be trying to negotiate with Canada and Europe. He may be trying to I don't know, strong arm Europe and China into compliance, and I do suspect maybe that's why he's kind of going after them first. Is if he can okay, I'm gonna shore up trade with the Western world first, and then we can go after China. But overall, if that theory is correct, then I don't think that Donald Trump's intention is to negotiate with and get a deal with China. I think that Donald Trump's intention is probably to just reduce dependence and foreign trade with China overall. And who knows? I know when I see all these, all this commentary about like, okay, so one story that really irked me. I really don't like Sam Altman. I really don't like the guy. Not that I've seen a lot of video of him talking or know anything about him personally, but just the stories that I read, the public comments that he does make, it shows to me a person that I think has a delusional view of the world and is doing things that I very strongly disagree with. And the one that really, really irked me was Sam Altman saying that if they're not allowed to train AI on copyrighted work, China will train their AI on whatever is available, and we will lose the AI war. And that might be true, but it sure seems to me like what they're doing is they're essentially stealing from us to make AIs that would replace us. That there are some people at the top that's their intention, you know? And the way that they justify it is, well, but we have to compete with China. Right? Okay, well, if China is that big of a threat, like, because honestly, what you're saying there is China's going to use artificial intelligence and it's going to take over everything, and then China will be the most dominant force in the world, not the United States, and that's not a world that I want to live in. So, if the risk of that, the danger of that is so high, why are we doing business with China? You know, you can have it both ways. If you allowed Trump to solely handle the peace talks, Trump would give Putin Alaska. Well, but that's I think that part of the reason why the conservative commentators are saying what they are saying is they're basically defending against these allegations that Donald Trump is just a wannabe dictator and he admires other dictators, and so that's why he admires Putin, or that Donald Trump is just a compromised Russian asset or something to that effect. No, they're saying that it is strategic, that they think that they can take the loss on Ukraine and do some things economically to pull Russia away from China's orbit. But I don't know. I don't think that it will. I honestly think let's see what happens. I feel like the chances are, although it's not really happening yet, so I'd say it's still very uncertain, but I think the chances are in favor that they do get some sort of peace treaty in Ukraine that probably will involve Ukraine giving up some territory, but maybe better than what the worst doomer scenarios a lot of people were predicting. Okay, I do think that will probably happen before Trump's term is over. So then the question would be, does Russia stop? Well, either way, it's going to seem like Russia stops because they really don't have the resources to just immediately go and embroil themselves in another war, right? So I don't know. Russia might be reeling for a long, long time. Well, I am getting some. So right now, I think it's ECB's De Guindos is talking right now. But we did see a little bit of a further move up in treasuries. I would say that while the action has been somewhat in line with what I expected, which is that it will be tight with short bursts of activity, and that there does appear to be some big players at work in the market. You can kind of see the hallmarks of them playing around. Part of it is just the way that you can see the Dom dance. Another part of it is there's a lot of liquidity out there. Right? So I do think that there are some large players, and we are seeing those large icebergs that I was anticipating. But it's been much more of a clear uptrend than I expected. So I think that had I been able to predict the flows better, there could have been a long trade in there for us. So at that point, we have to consider, is there more behind this? But the problem that I still have is that when I look at cumulative delta in particular here in the 10-year, it has been pretty much sideways, if not down, through this whole thing. It looks like that what is driving this is more the Japanese yen rising than it is flow coming directly into the treasury. And I'm really not sure why the Japanese yen is having the bull run that it is, because shouldn't all of the news be negative Japanese yen? I don't know. Maybe that it's just the pullback from yesterday's action, for all I know. Yeah. Okay. Okay, this is another one that I think is really weird, actually. So, like, the bottom line, the EU is stepping up their building weaponry, supplying Ukraine, etc. So, like, I saw this video by Philip DeFranco that was basically like, NATO is talking about, like, maybe they'll just ask the US to leave or things like that. And it's like you guys realize that they've been saying that since Obama, right? Like under Obama, they were saying, you know what, the EU needs to step up. The United States is supporting too much of this. We can't continue to spend so much on our military, et cetera, et cetera, et cetera. And then especially you got all these people over here in the United States that complain about how much the United States spends on the military. And then we're getting an opportunity for the Europeans to step up and the US not spend as much on the military, and everybody's upset about it. That's a bad thing, even though that's what everybody's been asking for like the last 20 years. What's with that? Make up your minds, people. Make up your minds. Either you want the United States to be the world's police or you don't. And personally, I kind of feel that while the trade relationships that we have with the world are an important part of the United States' success, it's gone too far. The United States is putting too much into military, and we need to be focusing more domestically. Yeah, can't make up your minds when all we have left politically is tit for tat. It really is true. It is kind of indicative of just where the left is, more generally speaking, right? because of the way that Obama took policy, there is not really any overarching consistent political ideology. There's not any kind of consistent political ideology behind the Democrat Party right now. It is primarily stay in power. And a part of that is that there is a real divide in the Democrat Party. There are like the far lefts that really they just want communism, or they want basic universal income is really what they want, or the kind of the more moderates, Clintonites, versus the kind of contradiction that, you know, there was certain things that they did that the Democrat base did believe that weren't very practical, and Obama went and did the practical thing. And so now they kind of have to face this conundrum between doing what will keep them in power and doing what the far left wants them to do. And that kind of becomes a bigger problem when you lose all of that institutional power that you had, because that was kind of like the only thing keeping that running. And now you're going to have to rebuild with an actual consistent ideology. And you're going to rebuild that with what? The super far left? It's not going so well, is it? It will be interesting to see. I mean, the next big decision point in U.S. politics is going to be the next midterms. And I think that a lot of people have this expectation that Democrats will do really well in the midterms. And I don't think that's what's going to happen. Because one, Democrats are just doing really, really poorly right now, and Republicans are doing really, really well in public opinion. And then two, the map is actually really tilted against Democrats. Even like a best case scenario for Democrats is like Congress is break even. So I should note this little pullback in the treasuries was accompanied by a bit more of an extended move down in the Japanese yen. Do you think a PA state district won by Trump by 16 points can be flipped? I mean, I'd have to go and look at this specific one. But if you go and you look at the map, there's the number of seats that are up for grabs in places won by Trump is a lot more than ones up for grab in places won by Kamala Harris. Sorry, it's the opposite. So basically what I'm saying is that Democrats would have to win every disputable race to take over Congress. Because I don't understand what you're saying, Izzy. Democrats shop up for off-cycle elections? This happened this week? Oh, because Democrats show up for off-cycle elections? Well, they have recently, at least, haven't they? I don't know. Off-cycle elections are a really interesting thing. But one district flipping is still, you realize you have to flip like all of them for the Democrats to win, right? It would be like the political feat of the century for Democrats to take over Congress. It's not impossible, but it would probably be like, no, I haven't read anything about that. Way to go, Lloyd. You found one thing in politics that happened that I didn't know about. Give me a break, man. Tell you what, on that decline in the treasuries, there was a lot of delta selling in the 30-year on that. Yeah, he sure is awfully focused on the politics, right? It's kind of funny because for such a long time, like the politics between Republicans and Democrats and how the election was, that was like the big thing, and arguing over how the public was going to perceive certain things was like a big deal, and we talked about it, right? And now they're just not as much of a factor because the Democrat Party is doing so poorly. It's just not that major of a factor. It's not that interesting to talk about anymore. Sorry. Like I said, for them to take over, like to flip the House, that's the best that they could do. Is they could flip the House by a like 1 or 2 members, so that they would have a 1 or 2 vote majority in the House. That's like the best that Democrats can do right now, and that would require them to basically win every competitive seat that they have. It would be a huge feat, which is why, you know, like especially what are we calling it? Signal Gate or whatever, right? It's also why I'm like, I'm reading about it, but it's not like a huge deal, because what's going to happen? They're going to have like congressional hearings and people in the media flip out about it and accusations of hypocrisy and all this, but then nothing's going to change. It's not really that relevant to what's happening here anymore, is it? No. But what is happening is that the geopolitics now is huge. The geopolitics is everything. And it kind of comes down to trying to read the mind of one man. Well, okay. I understand why retail traders want to believe that they can make all of their decisions just from looking at the chart, because figuring out this stuff and predicting it is hard. Unfortunately, there's not a whole lot of predictive edge in a 1-minute chart. There just isn't. At least it's most doable to read. No, it's not, though. That's... Oh, thank you. Thank you, Octavius. I did not turn it on. Let's see. Would it have taken an entry in any of that? And we would see if it would be like having the trade roll back on it right now. Because this is a situation. Okay, so it never did get there. But it might be getting... It might be getting close. Well, we'd have to go to like 43, I think. It's 7.5. It's set to 7.5 right now. So pretty far away from that. I would say though, like the delta on this decline has been much more consistent, hasn't it? The fallacy in your statement is assuming every retail trader solely looks at a 1-minute chart. Well, so if you were looking, so let me make it more broad then, okay? There's not much, I was just giving 1 minute as an example. There's not much predictive value available in an intraday chart. I look at price as the result. I have to have price to confirm or to sort out the predictive pieces of data that I do have, in what way they are predictive, because they are trying to predict price, but price itself is not predictive of price. Not on an intraday chart. Frankly, even on a daily chart, it's not very predictive. But once you start to add all of this portfolio magic and things like that, then there's an edge in it. Bitcoin not looking so hot this morning. And the whole metals complex has started to decline with all of this. I can't sort out. I mean, we did see the dollar. Like, the dollar kind of flipped around and rose, and that's when all of these things dropped. Trying to sort out if I still think that the 10-year has some business in it now that it's been an hour. Not so sure. But the gold is dropping super fast. So there's definitely something going on out there. Gold is getting savaged right now. Hi, Ann Steffa. Yeah, gold, silver, and copper. You're right. I guess in copper. So let's come back over here and see when we go to the 30-minute. Oh yeah, that's ugly. They're retracing probably 2/3 of the big move that we had 2 days ago. Oh, okay, so the treasuries did bounce off of the cost basis. That's interesting. Okay, so yeah, I've kind of been slowly browsing Reddit in the background, and here's one for us from Recruiting Hill. How? This person says they have a bachelor's of science in economics and accounting from a top 50 major university. 3 glowing written recommendations from previous executives and senior directors. Salary expectations are always set within range, even willing to take up to 50% pay cut. Prior professional roles at world-renowned organizations/institutions. Very little job hopping. Minimum 3 years. Last role was at almost over 8 years. They're in their mid-40s. Flawless interview skills, STAR method, completed assessments and exams, sometimes 2 hours long, essentially scoring in the 90 to 95th percentile. Outgoing personality, confident, etc. I've applied to McDonald's, Starbucks, Panda Express, Home Depot, Macy's, government, jobs, private sector, education, nonprofits, startups. Countless interviews, numerous final rounds, 0 offers, 3 years unemployed. Can you believe that? That is insane. That is insane. The tracks of every... Okay. Can you prove that? I guess in this instance, what you're saying kind of... I'm kind of like, what are they really trying to say here? Like, the words make sense, but like the bigger picture that you're getting doesn't. Tracks of every daily, weekly, monthly market turn or Momo ship always trace back to a shift on the lower time frame. But how does that relate to that there is not very much predictive value in intraday price? Because it sounds like that's an argument that you think contradicts that. But then, I don't know, like when a daily trend starts, it starts on the intraday. I mean, I guess, but that doesn't necessarily mean that you can predict anything from it. Oh, you took -3 on that? Really? As a higher time frame dilemma, is it a pullback or a turn? Once it reveals itself, it's too late to fix it. Okay. Well. At the end of the day, you still have to prove a predictive signal somewhere, right? So like my golden standard for a predictive signal is this. If you go in and you look at you look at an individual order and you see that it is a market buy order, you can come back an hour later and there is a 0.5% chance that a random order picked an hour later will also be a market buy order. Okay, that's like my golden standard. So I'm predicting the sign of the order. Okay. Show me something with your intraday price chart that you can make a prediction like that. We're reading this Reddit thread. That's insane. So sorry to hear this. I'm not that far ahead of you in age, but I do know what it's like to be 40 plus and all of a sudden be undesirable. Ageism is real. We suffer together, my friend, but keep moving forward. Even if you switch tracks completely, just keep the nose pointed north. At this point, I can't offer any tips, tricks, or insights that you haven't already been at for a while. Just understanding and sympathy. I do wonder to what extent it kind of seems like after you're 35, you're suddenly less desirable. Although maybe primarily because you have experience and they have to pay you for that experience, you know? But I see a lot of stuff from people that are like 50 where it's really tough for them. And it can kind of be turned into like you do really well your whole life and you got everything saving up for retirement and you're doing everything right. And then you get to your 50s and it all falls apart because of ageism. That's, you know, that's a pretty bum deal. That kind of feels like a breach of the social contract sort of a thing, you know? Okay, we're getting a real move here now. The S&P 500 turning down after the open. The Treasury is actually starting to see flight to safety. News Squawk is not saying that there's no specific news event, though. Okay, so you were talking about momentum yesterday. Yes. Momentum portfolio strategies are a known profitable strategy. I'm curious to see if this fizzles out in the 10-year again, or if they really run now. If they really run, that would probably be something else. Like, might be hard for them. I guess I'm saying it might be hard for them to beat out this resistance. So let's just see. Okay, why couldn't a day trader only take setups that align with that long-term momentum? So there's going to be a couple of issues with that. So first of all, the reason that a momentum portfolio works is because it's a portfolio, right? So running momentum on an individual asset is not very effective. And so trying to take intraday trades based on momentum triggers on daily bars in a single asset on its own probably isn't going to be super effective. But you are getting something that now you're talking about something that does predict order flows to some extent. I wouldn't say that it's like insane or anything. I guess what I'm trying to say there is it's not like a super strong predictor. But yes, now you're talking about something that can predict order flows. And in fact, what a lot of the flow reports that you get from Wall Street analysts do is that they quantify what those CTA momentum portfolio hedge funds are going to do. So they're predicting order flow. So, in other words, are there certain signals on daily bars that might predict order flows? Yes. But that's exactly why my qualifier was intraday chart, right? When you go to a daily chart, there's some things where the analysis of price alone has some uses, but it's really, really complicated. Like, to really make money from that requires a whole bunch of other pieces. And the real magic in those portfolios is the other pieces and not the technical analysis signal. If you come here, I mean, I do talk about this pretty frequently. Just coming in and looking at my daily chart, looking at where the 50, 100, and 200 day moving averages are, looking at where my ATR stop is, looking at 50 day, or, like, how long has it been since a new high, new low sort of a thing. Because those are all things that can help me predict what momentum portfolios will do. Isn't that what an index does? S&P 500. Well, okay, so again, the reason that a momentum portfolio works is because you're trading a portfolio of assets, right? So I would say, well, I'd have to go back and look for sure, but a lot of the profits that have come from momentum portfolios over the past few decades was not from the S&P 500. A really, really big part of it was actually the bonds. So then on top of that, they buy bonds with the assets that they're not using, and they make yield on that, is kind of one of the things that really helps amp up their profits. But you can go and have a interview with Andreas Klenow, and we talk about those things. So he was saying something specifically about the interest rates. Used to be 3 years ago, accounting jobs were all over the place, and now my accountant friends have it comparatively better than my STEM friends. Yes, accounting is doing really, really well. I think if there was a field right now that is like, the field to get into, just if the only factor involved is like the future job prospects and everything, seems like accounting is the one right now. Mutual funds were birthed out of what you're saying, basically spreading. I mean, most mutual funds do not operate in that way. Most mutual funds are more about doing a fundamental analysis of the individual stocks and deciding which ones to stick in their portfolio and which ones not to. So, momentum portfolios are much more common among CTA firms. There are momentum stock portfolios, but it's really the futures trading, commodities trading advisors that really employ those kinds of strategies, because the propensity for assets to trend over very, very long time frames is really something that is an effect that is seen most strongly in commodities. I'm just noting, you know, that the treasuries did push up there to a new high, but it's so far it's been pretty tame. What are you saying? Aside from short impulse moves, it's impossible for a fund to move against the move of the weighted assets within it. Oh yeah, okay, but how they're picking which assets they put in is different, right? But I'm still stuck at, why are you even bringing up the, you know, that the S&P 500 is an index of 500 assets? That doesn't mean that a move on a 1 or a 5 minute chart is going to predict what's going to happen in the next 1 to 30 minutes. An index is basically a mutual fund. No, you're playing games, right? What is the ultimate thesis? Like your thesis saying an index is basically my thesis is an index fund is basically a mutual fund. I'm not sure that I agree. I mean, there are key differences between them, but like whether they are or aren't kind of depends on which properties we're talking about here that matter, right? So again, why does it even matter? So that's not actually a thesis, right? That is, you're trying to prove something so that you can bring something up later that we haven't even discussed to try and say like, aha, see, I got you. But what you're doing is you're kind of limiting scope and making it so that we can't use all of our higher level kind of LLM style thinking to understand, because we don't know what the ultimate destination is. So you're basically kind of shoehorning people into logical fallacies, right? One of the best. Okay, what's the arbitrage play? Just noticing this big order at 20. Trying to decide if I think that's significant or not. See, like here I was saying there's not much predictive value in an intraday chart. And all of a sudden you're like, but there's this huge arbitrage play available. Like, what? Dude, what are you talking about? What are you talking about? You seriously don't know what you want? Nope, I seriously don't. Does anybody else in chat know what he's talking about? I don't think anybody else knows what you're talking about, dude. I think that you're kind of using narcissistic tactics to try and elevate yourself, but it's not working because I understand how people think and I understand how logic works, and I can kind of see how you're trying to manipulate the conversation. I mean, the conversation wasn't about some arbitrage play that you know about. The conversation was there's not much predictive value in an intraday chart. Let me dummy down. Okay, there you go. See, so this is the narcissistic. Oh, what's the cost basis? It's at 15. Buyer cost basis is at 15. They're kind of throwing it up there, and like meanwhile I'm hearing stuff on the news squawk like it sounds like world leaders are kind of coming out and saying stuff, so that might be part of why the treasuries are just running here, because otherwise I think that they would have a hard time sustaining these. Look at the cumulative delta in the 10-year. This is very rare. This is very rare in the 10-year. We are in an uptrend, and the overall cumulative delta is sell. So, cumulative delta and price, they kind of have an interesting relationship. But to see them go like opposites of each other in this kind of way is extremely rare for the 10-year treasury. Now, when you look at other ones, now it's kind of more, oh, okay. There's much more buying, much more relatively concentrated in the 30-year. But, well, and are you seeing steepening? You are seeing steepening. Oh, now that actually doesn't make sense. You're seeing steepening, but there was more buying in the 30-year. That's kind of a little bit weird, right? Okay. So if Microsoft and Google tank, the NQ, aside from impulse moves up, it's going to drop, sure. Yes, if Apple tanks, you're likely going to see the S&P 500 and the NQ tank as well. Yeah, the arbitrage is obvious. A retail trader can't do it, but big boys do. Yeah. There's likely somebody out there that makes a little bit of money from arbitraging that, sure. Oh, is it time to restart the playlist? Spoos are coming back up awfully quickly. That's all I'm saying is that I can align my day trading entries in that alignment. So now I think you're saying something beyond what we can really glean from an arbitrage opportunity, right? Because how does an arbitrage opportunity work? If the Apple declines, right? I'm going to do something like I'm going to buy one asset and sell the other asset on the expectation that the gap between those comes back together, right? So that's not giving you anything that really is going to like help you over a 30-minute period or something like that, right? So I wouldn't trade against it, which is to say, if Apple declines, I'm not going to buy the S&P 500. But you're talking about a period of time that's like an instant in which that matters anyways. So, that particular thing, I don't think you can really bring a whole lot of relevance to what you do as a retail trader. At that point, why not just know why Apple is declining and estimate how much volume is going to sell because of that particular event and go short Apple until you've seen the amount of orders that you were expecting? Anyways, I'm still kind of like feel like you just kind of tried to change the conversation, right? I said there's very little predictive value in an intraday chart. That what you just said doesn't seem to have anything to do with that. I mean, I think I understand why in your mind this would all make sense, but you're still kind of missing the larger point. Like, okay, if that's true, can you prove it empirically? Right? You've walked through in your mind this detailed set of logic. If this, then I should be able to do this and make money. Okay. But then the next step in the scientific process is to show if you can, using the data, empirically, that that's true. You can't seem to grasp the power of a selective market play. No, I don't get distracted by when you try and change the subject, right? I said there's not much predictive power in a single intraday chart. Now you've completely changed the subject to anything else. So then I go back to the key argument here, which is you have to have empirical evidence about something. If you think that the market tends to do something, then show empirical evidence of it. I don't care what your setup or the thing that you think is happening or how much it logically makes sense in your head. If you can't prove it empirically, it's not a thing. Seems to be something that you should be able to prove empirically. Well, it does look like that the Treasury's fizzled out there again. But I think that has more to do with the S&P 500 reversing. No way that I would have guessed that the S&P 500 would recover all that so quickly. Holy crap. Now, gold is trying to start a retracement, but it's not. Okay, Donald Trump is speaking now, huh? We'll give an integral response to the U.S. on April 3rd, says Mexico's President Sheinbaum. Because the News Squawk is talking about it. They asked, how do you know Trump is speaking? Because I'm hearing comments from my News Squawk. So right now, President Macron has been speaking, and Mexico's President Sheinbaum has been speaking. I need to get one of those already. I tell you what, man, if there's anything you can spend money on that will assist your trading, it's a News Squawk for sure. And I'm not just saying that because I have an affiliate link in the video description that gives you a News Squawk for $100 a month. Do you get the text/audio? They will often have links. They will sometimes in the feed post links if that exists. But this one sounds like this is a press conference, so they're not going to have text, at least not right away. Instead, I'm just getting blurbs like they're summarizing what they're saying. Now, with that said, I haven't seen Trump's comments pop up on Twitter, so I may have misheard. Maybe what I actually heard was Sheinbaum referring to Trump or something like that. By the way, what was the pending sales? U.S. pending homes index. Home sales change month over month 2% versus an expected 1%. This whole conversation started by me. No, that is not how it started. This whole conversation started from me asserting that there is not much predictive value in a single intraday price chart. If I only take trades aligning with a daily, weekly, monthly chart, how does that translate to a minute chart? Whole conversation started like a month ago. I like this maybe. Yeah, but the other question, which is, okay, if we can potentially predict future orders using momentum triggers on daily charts to predict how momentum funds will behave, does that translate to trades that we can take on a minute chart? Unclear. But I think it's a good enough one that you could take trades off of it, if you are also able to consider all of the other flows that can be coming into that stock that day or that asset that day, right? But again, my assertion was there's not much predictive value in a single intraday time price series. If the 1 hour, 4-day, week, month are all red and I go short aside from an impulse moves, that does not work. Unfortunately. We've tested that one. That doesn't work. Some interesting behavior with it, but overall I have found that it does not work, and that you miss too many of the best opportunities when you limit yourself to when all time frames are in confluence. Who is using the intraday chart as predictive? 95% of retail traders. 95% of retail day traders are relying almost exclusively on an intraday chart for their trades. Because he asks, is that how Ox trades? It's been too long. I only was looking at that channel for a hot minute because there was that whole prop firm blow up and everything. But I believe that he was mostly doing candlestick patterns. How did I contradict myself? I kind of feel like, Uzi, that you at this point you could just come out right with your theory. Like, I don't know. Is there advantage to just continuing to? I don't know. No. Keep it. Okay. Okay. And what's something that I really hate is when we're having like a back and forth conversation And it's like I'm getting the feedback. So it's like, okay, you see this, or say this, or that. And then I say something, and it's just like dead silence after that, you know? You should be trying to win it back. Okay. I'm gonna trust you, Izzy, okay? No, that's not. You just said higher time frame alignment doesn't miss opportunity. No, that's I said that limiting your trades to higher time frame alignment misses some of the best opportunities. So then you're using a short time frame. No, I'm not using a time frame at all, really. I'm just looking for moments where I have a confluence between an optimal entry location based on the liquidity and a predicted imbalance in the future flows. And I don't really care whether the 1 hour or the 1 day bar chart is positive or negative or anything like that. Because what I found through the testing was that when you use that as a filter, it doesn't improve your hit rate at all. It was an ineffective filter. It didn't improve the statistical properties of the trades that you were taking, and it filtered too many trades out. But that's probably just because a single intraday time price series is not very predictive of anything. So if you're waiting for the imbalance, no. Because it has nothing to do with anything on a chart. Right? As the point at which I know there is going to be an imbalance has nothing to do with the chart. It's just that happens to be when I was doing my thinking and thought of it. And I'm going to take a trade as early as I can and hold it as long as I can. But there is nothing on a 30-second chart that I'm using to do that. Now, there is an argument to be made that looking at the order flow on a 1-minute chart, and I would say a 1-minute chart because once you start back testing on timeframes less than 1 minute, you run into issues. There is an argument to be made that when you're looking at the orders, that the orders might be able to predict something. Right? So again, it all comes back to you got to decipher this thing that I'm saying. There is not much predictive value in a single time, in a single intraday time price series. Okay. So what is that? Where does that? Let's split that up. Single series, intraday, price. Right? So now you can come back to all of the things that I look at, and you can see how they violate that, right? Momentum portfolios. They violate two of those. You're not doing a single series, you're doing a whole portfolio of data series, and you're not using intraday data. Right? Arbitrage. Arbitrage is the thing. It's not a single series. You're looking at two series or more than two series, right? So arbitrage violates that. Order flow. Well, order flow is the orders and not price. So order flow setups violate that. You see? So it's like there's not much predictive value in a single intraday time price series, but just about any way that you can think of that would change this, there's probably an edge there to be had. And that's the funny thing, is that retail day traders, rather, because I mean there are swing traders, right? Retail day traders are relying almost exclusively on a single intraday time price series as the basis for their trades. Price action traders are looking at that chart and they're saying, based on how big this candlestick is and where it is in relation to this past candlestick, is whether they decide to get long or short. And the results that they are getting are mostly random, because there's not actually any edge in any of that. So here, Octavia says back to 16, highest option open interest expires tomorrow. So what is he doing? He's pulling in other data aside from this single intraday price series to point out something significant about a particular price. The options all expire at the 16. Could matter. I think, yeah. The trick is bringing in things that are beyond the single intraday price series. You're still going to have that single intraday price series on your desktop, right? Because that's the result. That's the thing that you're trying to predict. But you have to have other information in order to predict that thing. Price is the result. Oh boy. I'm sure that the comments on this thread are all going to be really reasonable comments from r/advice. My boyfriend quit gaming. Now I live with a board and frustrated guy. Oh, I gotta read this. This is gonna be good. Okay. My boyfriend, 28-year-old male, recently decided to quit gaming after years of being hooked on it. He's been a gamer ever since he was a teenager, and the decision to quit came after he realized how much time and money he was spending on it. Okay, he did it all on his own. That's cool. The problem is that he's always bored and easily frustrated. He sits around the house all day, sighing or getting annoyed at the smallest things. If I suggest we do something together, he either acts uninterested or says it's too much effort. That sounds like ADHD. I'm not sure how to deal with this. It's starting to affect our relationship. Has anyone been through something similar? How can I support him through this? Or is this just a phase he has to get over? Boy, he needs a hobby. Yeah, you gotta have something. You gotta find another hobby. Probably what you should do is find another hobby and then pick gaming back up and just not game as much. And or have rotating hobbies, depending on your neural chemistry. That wasn't as bad as I thought it was going to be. Day trading, why traders limit themselves to that time period, why they just don't trade whenever they see trades that are worth taking. Well, okay, so how is it that we are limiting ourselves to that time period? All we're saying is they have a 1 minute chart or a 5 minute chart or a 30-minute chart up, and that's the thing that they're looking at for their signals. So why not? So one could say, oh, I should look at all of those charts. But if they're all intraday charts, it's not going to help you. But more broadly, it is like whenever you can see trades that are worth taking. But what is the thing that triggers you into a trade, right? Well, I'm saying that for effective day trading, you really need a outside piece of information, some sort of informational inefficiency that you can't see on that intraday chart. And so when I have a piece of information like that, and yes, momentum triggers from daily charts can be a part of that, but I'm combining a bunch of different things together that I know about that can possibly predict orders and seeing what that net imbalance is that day in order to predict it, right? Because guess what? It's complicated, right? Like if I come in and I were to say, like we were asking earlier, okay, so if you can predict future orders with momentum triggers, then can't you just wait for the momentum trigger on the daily bars and then take it intraday? Well, we could backtest that, but I'm going to bet you that if you backtest that you're going to find that it's not a profitable strategy. And why is that? Well, because you're predicting future orders. That doesn't necessarily predict price. Why? Because you're only predicting a certain percentage of the orders that day, right? So that's why we have to combine a bunch of different things so that we can get as complete of a picture of what the future orders are going to be as possible. And then you can say, all right, now I see an imbalance. Okay, your timing will be off. Now with what I talked about, well, there's not really any timing to that. And what you will find I do very, very often is I'll get into a trade and be way, way too early with it. Happens a lot. On the other hand, for a lot of these things, there's more activity in business done earlier in the session. So it is to your advantage to just do it as early as possible. And you can use the liquidity conditions to optimize your entry somewhat. Okay. So those are the things that we know of that will help you on that side. But ultimately, I still, it is my opinion that you need some sort of outside informational inefficiency that you can't see on that single intraday time price chart. And the biggest problem that retail traders have is that almost everything that they are taught is about analyzing a single intraday time price data series when there's no edge to be had from that. Yeah, timing in the sense that you'll enter and get caught in intraday chop before it gets going in the daily plus time frame momentum. Even if you have set stops, you get chewed up with negative. Yeah, well, your adverse excursion will be higher than you want. Yeah. But I mean, that's another kind of issue, is that as retail traders, we kind of want our maximum excursion to be like 0. And that's kind of an unrealistic goal. Yeah. Basically impossible. Well, maybe not impossible, but there are definitely some, like, I bet you there are some HFTs that do have an MAE that's practically 0. But not as a retail trader, it's not practical. Yeah. What do you mean orders that did not trigger are irrelevant? They did not impact price. So are you saying like stop orders that didn't get triggered are irrelevant? Perhaps. Yeah, as a schmuck with a PC, no way. Yeah. We haven't. So I did find a study. Did I save it? I don't know what I did with it. I did find a study that suggested that there are more take profit orders before a large round number and more stop orders after a round number. So this is this is one of my favorite arguments, and we don't talk about it enough, but I probably should spend more time talking about this. One of the things that I find the most hilarious is that the largest, like, technical edge that you can glean from, like, a purely technical perspective that I know of is not anything to do with the chart, but simply whether the price ends in a 5 or a 0. Right? There is more edge in a particular price level ending in a 5 or a 0 than there is the size of the bar and where it was relative to all of these other things. That is really amusing to me. That is picking up on a real cognitive bias that humans have. That's like what technical analysis is supposed to be. And that is something that is relatively well proven and established in the financial world. But you never see technical analysis traders on YouTube talking about that. It's almost like everything is set up to lead you towards things that don't work. Isn't that interesting? Everything that's popular are things that were fundamentally flawed to begin with and don't work. And all of the things that we do have evidence of, nobody cares about. What's with that? I'll tell you why. Because the market wasn't built for you. Market was built for super rich people in large institutions that have to transact they have to move huge amounts of money. And they need the liquidity in order to perform those transactions. And that's who the market was built for. So it is essentially set up in a way so that those guys can make their big moves, and everybody else that tries to participate comes out break even. Spend a few billion. You know what? You can actually get some co-located servers and be relatively fast. So my understanding is you're not going to be the fastest, but there are data centers you can buy that, you can get a system in for relatively cheap too. Like it's within our capability. It's within our capability. That it gets you fast enough that it matters to the performance of your strategy, even if you're not the fastest. Basically inside and outs. I mean, I guess. Yeah. If you were inside the club and you knew what the institution was going to do before they started executing you, you could front run it and everything, but there's like laws against that. You have to execute your client's order before yours. One of the things that I kind of find amusing about all this is, like, again, because of complexity, you can have people that do everything right and still fail, and you can have people that do everything wrong and win. And what happens is most people just kind of do kind of meh, especially in the current economy, because there's just not a lot of money going around. And when there was money going around, there wasn't a lot of actual real GDP growth. And so, people have kind of been fighting over not as much growth. And so they say, I didn't have success by playing the rules, but I see these people, it seems like they broke every rule and they made money. So maybe I should go and I should do that. But you know what happens is they go and they break every rule, and then they're still not successful. Because the reality is that the few people that were successful, there's just a lot of luck involved with it. There is, because of complexity, there is emergent behavior at the high level that is difficult for us to predict. And it just kind of depends if you ended up being on the right or wrong side of that emergent behavior that you couldn't really have the capability to predict. Break every rule, pay regulators to work. Well, but I don't think Citadel ever broke any rules, though. There's maybe some places, like there's the whole like payment for order flow thing, which was kind of like a fuzzy zone, but they said, no, that's okay. But that's probably the best example of my assertion that the markets was not created for you. You have all of these players that they have this incredibly complicated ecosystem to execute orders through. Why isn't the law all orders must be sent to the exchange and all transactions must be done on the exchange? Well, because there's all these people that kind of staked out their own little section of it, and they don't want to give it up. Oh, here's another one from Recruiting Hell. Go get a job at Walmart. Okay, boomer. Then they applied at Walmart and got rejected. Look at some rules there, a joke. Oh, well, can you list out to me a particular rule that you think they broke? There's another thing that I think is kind of funny. Well, not funny, but one of the nuances that you have to get into that kind of conversation is when you have such a large organization like that, you are going to make mistakes. So you are going to break some rules. That doesn't necessarily mean that they're intentionally trying to be dishonest in some way or something, you know? Got into a debate on Rule 534. You know, that sounds familiar. Wash trades. Oh, yeah. So we were looking at that on the wash trade thing. Can you take opposite positions on minis and micros? Sure you could. So what would be prohibited is on one instrument using two accounts and buying on one account and selling on the other account. But taking opposite positions on minis and micros, that's how you would do arbitrage, right? Of course, you could buy and sell them in a way in which you wouldn't be capturing an arbitrage opportunity, and then you're just going to make money on one and lose money on the other, and what's the point of that? But in multiple accounts required for violation, I think so. But I could see where you might be able to do something like, I have a position on well, I don't think that this would work, but theoretically, a situation could happen where it'd have to be a different instrument and everything, but like, you buy in the one, and then you have a position long in the one, and then you start buying the other one in a way that will cause it to move so that you can make the money from that other one, right? Like, that's something that you will see from time to time in the treasuries. It's called push and pull, where basically somebody wants to get filled. Like over here in the 10-year, I want to get filled at 14, but that's kind of hard to do. How am I going to do that? Well, I could buy the 30-year up. That might be less contracts. And because the 30-year ticked up, the 10-year will tick up too. And then I get my fill. There are little games that, now that's like an extreme, okay? I don't think it would make sense to do it that way, but like there are some games like that that get played. And there are some fuzziness in the rules wherein you can say that you're manipulating prices in a manipulative way and things like that. So there's kind of this gray area. And most of the stuff in that gray area is just considered okay, right? This is where it gets into all of these conspiracy theories that the GameStop people like probably the reason that person is arguing with you. I'm gonna bet that they're one of those GameStop people because they all believed that, you know, GameStop was set to go to 1,000, and because they were using short laddering attacks and all of these sorts of things that, well, no, that stuff doesn't work unless like there's no volume, there's no liquidity in that instrument. Like you might be able to do that in the 2-year micros, right? I can take out the 3 orders that are there and the 1 order that's there and move it and then hope that that's going to be enough to cause more people to buy into me and I can take my profit at just before that 4014, right? That's possibly feasible. And there are some people that say that that's a violation, although I don't think that you would get prosecuted for that. It'd also be super risky because the robot might just start to say, nope, no, I'm just going to sell into you because I'm bigger than you. It's probably how it actually play out. Well, I tell you what, man, there was some interesting points in the S&P or in the treasuries today, but I would call this, like, I think that if I was actively taking trades, I probably would be frustrated because none of them ran. And I tend to want to let something run, right? Maybe if I was taking small scalps. But it's been tight. So I think there was a little bit more trend at the beginning of the session than I expected. But otherwise, my call for the day was pretty spot on. That I was able to describe what the liquidity conditions were going to be like pretty okay. And kind of said to me, I don't necessarily want to take a trade, but I need to be ready to take a trade in case something happens. And there was some times where there was speaking and everything. I thought maybe I would take a trade, but they never said it's something that moved my needle. You know what I mean? It was like, oh, there's an opportunity here for this. Never happened. It's kind of like, this is just kind of the same job owning as doesn't do anything. GameStop is down 13%. I'm reporting it because no media is reporting about it. Yeah, I don't think that anybody really cares anymore, but let's go look at it. Here's a link. If you post a link, I won't be able to see it. And Griffin staffer for national security work. Wouldn't surprise me. Tesla has been recovering this past week. Let's see if they get smacked down lower. There's another leg down in the S&P, how they fare. Yeah, it's down because the earnings day there was a irrational spike up. But they would probably need to get below 20 before it would really anybody would care. What do you got for me here, Octavius? Oh, SPX options. Magnet strikes. Oh, that's interesting. So they're saying 57.50. For the oh, we're past that. Either way, you know, we haven't talked about this very much, but I would expect that barring any kind of headline risk, that you probably see decent buying into the close tomorrow. The way that the risk parity funds and the index funds work, they're almost certainly going to be net imbalance buy. Models have already shown that. Maybe slight selling in the treasuries, but with where we're at right now in the treasuries, that's it's a little bit. There's probably not a huge imbalance in the treasuries for it. End of month flows, but in the equities, there should be pretty strong buy in equities. So that's another predictor of order flow that you should potentially be able to use. And by the way, if tomorrow is anything like today, where we have a lot of selling on the open and there's lots of job owning and all of this kind of scary stuff, I would probably use that as an opportunity to buy the dip. That's my plan for tomorrow. Of course, plans can change. Might get more information tomorrow, but based on the information that I have today, I think that I buy any dip and hold it into the close. I'm working on an edge for the last hour of equities. Well, you could also, another thing supposedly is you can look at the first hour and the last hour, and they tend to go the same direction. That's another behavior that I've seen. But you'd probably need more than that. But on the end of quarter, yeah, probably going to be a buy. Yeah, I didn't see this on Zero Hedge. Is Doge winning? Continuing jobless claims in DC, the highest since 2021. Headline initial jobless claims rose by 224 last week. A very boring, very steady, very non-recessionary signal that the labor market is just fine despite all of the partisan panic in soft data surveys. Michigan and Texas saw the biggest decline in jobless claims last week, while Oregon and Kentucky saw the biggest increase. Nationwide, continuing jobless claims continue to oscillate around 1.9 million Americans. Of course, all eyes are on DC and the impact of Doge, while initial jobless claims are slowing in the region as a multitude of lawsuits stall the process of draining the swamp. We note that continuing jobless claims in DC are now at their highest since 2021. And across the deep tri-state, jobless claims continue to rise. So is Doge winning? They ask. Half of parents, wait, what? Really? Half of parents are paying their Gen Z and millennial adult children $1,474 a month, but they plan to pull the plug in the next 2 years because it's eating into retirement. That sounds like not the... About 50% of parents' financial support at least one of their adult children over the age of 18. Working age Gen Zers receive the most at an average of 1813. Yeah, but that's not... Yeah. Moody's is doing a US downgrade. That's something that in the past has moved the markets, and I'm surprised that I'm not seeing a boost here. I'm not entirely sure how this would go. I think it would probably be a sell the treasuries, but seem to be ignoring it. Well, I don't know if anything is going to happen before we go. When the news squawk started talking, I definitely got excited because he said it and that was like, this is a big deal. It is, by the way, Bitcoin bouncing pretty good. Gold recovered all of its losses. How did I miss that? And it started about an hour ago. Wowzer. That's quite the roller coaster in gold. It's like a $70, sorry, a $30 move in gold. Down and then back up. AMG says hi. Oh, hi. You coming in at the end of the stream. I'm sorry. We start 8:30 Eastern time. In fact, I think I'm just going to stop it right here. This move in treasuries was kind of interesting. There is still some good liquidity out there too. No worries. Good to see you. Oh, well, thank you so much. Yep. Yeah, tomorrow might be a more interesting day. The most interesting part of the day is going to be like the equities close, so I won't be around for that, but it'd be a pretty big quarterly close. So I'll see you guys tomorrow. Stay excellent, team.